My name is Tabitha. Welcome to my YouTube channel. Today I'm going to talk about cash disbursement journals. Cash disbursement journals are payments made by your company to other companies or manufacturers, suppliers, or vendors. They are basically cash payout. They're all record of cash paid by your company to suppliers or for other expenses such as rent and taxes, like I just said before. So let's look at this in this way. Let's say, for example, your company went to a supplier and they purchased goods on account, which means they did not pay anything upfront, but they got the time to pay back the invoice within 30 days. Your company did not pay it within 10 days, so there was no discount. So what will happen next is your company will receive a purchase invoice, and this is how it will look like. You will have a purchase invoice that look like this. As usual, this is where you will have a supplier address and the date of the invoice and the number of invoice, the customer number, they're all in there. On the other side, you have your company address and the term of sales, term of purchase. So here we have 2/10 or N/30. So if your company decide to pay that invoice within 10 days, they will get 2% of the invoice price. But if they decide that they will pay it in 30 days, and then they will pay the full amount of invoice. So let's see, what did they buy and when? So they bought an item of office supply in January 7th of 2003, and the quantity that they bought was 1, and the unit price is 5,306.96. So because the unit price times quantity will give you the same price, and then you'll get the subtotal and then add your PST, which is provincial sale tax, and then GSTs. Your total amount, which is your total invoice, will be 6,103.01 cents. So that is a bit of the overview of invoice. So the next step will be your company preparing purchase journals. So the purchase journals will show you the date of the invoice, and then it will show you the vendor and then the vendor number, account payable. In the purchase journals, you have account payable. It's your company who is responsible to go pay account payable because they did not pay for those goods up upfront. And because account payable is a liability account, is always credit when you're getting it. And then it's the amount of the invoice that is equivalent to account payable. This is the invoice amount. When you come down here, you do not record purchases. Why? Because the item that you're buying is not for sale. It is for use in the business. So here you leave it empty, blank. And then here you have a GST. You debit your GST, which is 371.49 cents. And you have the office supply. Since the office supply is an asset that is not meant for resale, you will have this total amount, which is the amount of office, the unit price, the total price of office supply plus the PST. So you have your total of your item plus your PST. Right? You add them together. This is the total purchase. So when you add them together, you get that asset amount. Why do you add PST? You add PST because this is not item for resale. Next step will be, how do you record now cash disbursement after 30 days? So it is like the process. You go to a supplier, you buy good on account, they send you invoice. After you get an invoice, you prepare your purchase journal. After you have your purchase journal, you wait now for 30 days. After 30 days, you have to pay that invoice. So what did you do? You record the date of that payment, which is January 24. That's when you are removing the money from your bank to pay the invoice to your supplier. You also record the bank as credit. The amount that is used to pay that invoice will be credited for the full amount of that invoice, which is 6,103.01. Another thing that you will do in this process is debiting account payable. Since you have now paid account payable, you will have to debit it just to balance your book. With the same amount of 6,103.01. Let's see. So this is how your cash disbursement journal will look like. It's the date when the cash was paid out, the vendor name, which is office product in, and then this is the check number if you are paying your vendor with a check, and then the vendor's number, bank. So this is where you record the amount that was taken from the bank. So bank always represent maybe, or sometimes represent cash. So when you're withdrawing that cash from your bank, from the company's bank account, you are reducing cash when you're reducing cash as asset account, you have to credit it. And the amount is 6,103.01. Here you have AP account. AP account is the account payable. It was credit before because it was a liability account. It is still liability account, but when liability account amount reduce and then you debit, and this is the amount that you debit your account payable. So now it's balanced out. You don't need to record purchase discount because you don't have no purchase discount. GST receipt PS. GST payable, they are not relevant here because it's like after you did the sale long time ago. This is the end of the video. Thank you for watching. See you next time.